Let's discuss what's happening with China, the deflation story, their trade picture. And for that, Peter Cardillo is joining us, Chief Market Economist at Spartan Capital Securities. Peter, always good to get in your perspective. Thanks for joining us here on this edition of Russia. Do tell us, in your opinion, in light of the current deflation that is getting reported in China, how do you think the government is going to react? Are you expecting stimulus measures? Are you expecting tax cuts? What exactly do you expect the government to do? Do you think there's going to be higher spending by the government?
I think China is headed to a serious problem of deflation, and we saw that with the numbers today. And that means that they're going to have to do a lot to prop up economic activity, probably incentives on taxes, and if need be, continue with relaxed monetary policy and government intervention. I don't see how China can escape a recession. In fact, I think they're probably already in recession. So, which means the worst of all evils could actually grip China, and that would be a deflationary spiral that was similar to what we saw in the Japanese economy. And of course, that would be negative for the global economy.
So, Peter, if domestic demand in China is taking the kind of dip that it's currently seeing, tell us about its standing as the world's factory. Is that image, that potential going to get sufficiently tarnished now? And do you think, as a fallout, there could be economies like India that could gain?
Yeah, I think it's been tarnished, and there's been a lot of talk, and probably for the right reasons, that most people are looking for India to emerge as the savior of the second world's economy, that is basically supplying the rest of the global economy of what China is not likely to be able to supply for some time in the near future. Of course, that's still far away. So with the Chinese economy continuing to weaken, and again, with the threat of deflation setting in, that is going to be very challenging for the global economies. And in fact, one of the things that sort of puzzles me is the fact that we see oil prices continuing to rise on the back of production cuts. But if the China demand continues to falter, then I think, we could see deflation beginning to hit commodities in general.
What about the debt concerns that are being spoken about when it comes to China, Peter? How much of an impact is that going to have on investments into Chinese equities and Chinese markets?
Well, I think it's going to have a very negative effect. In fact, the Hong Kong market and the Shanghai market, although it's a small market, continues to do well. But there will come a time that if the market recognizes that there is trouble, especially deflation, that could be quite negative. Although in a deflationary spiral, you would have low, actually negative interest rates. And so that could be somewhat of a support for risk assets, but that will take some time.
What about supply constraints, Peter? How much is that going to damage the global economy that relies heavily on Chinese exports to the world?
Yeah, well, we saw the exports just the other day where they plunged. And so, look, if China does move into negative economic territory and there is deflation, I think the rest of the world is going to feel it. And that means that central banks certainly would have to reverse the tight monetary policies, although we're getting pretty close to that happening anyway. But then we could see global interest rates begin to come down, despite the high rate of inflation in the West. But of course, deflationary problems would be quite negative in terms of global economic activity.
Just in China that we can expect interest rate cuts. You're saying that globally as well, several central banks will have to rethink their strategy and go in for higher interest rate cuts in times to come, because what happens in China is going to have an impact on the rest of the world. Peter, thank you very much for joining us with your perspective. I'm afraid we've run out of time, but of course we will keep coming back to you for more on this story. Thanks indeed.